So hi guys, today we'll look at Suncor Energy second quarter of 2021. So earnings ending in June and the financial statement was released at the end of July. The next financial statement release will be at the end of October 2021. So first for the strategy update, Suncor still does debt reduction, share buyback, but it has now a new strategic objective, which is becoming net zero in GHG emissions. So for shareholders, that means the same pros, same cons from last time. But now we get protecting environment and respecting regulations by emitting less CO2. Now, shareholders want to see production increase in revenue, lowering costs. So the new strategy about net zero does not benefit shareholders unless their subventions benefits or if the company has to do it for politic or reputation reasons. Net zero does not attract new shareholders, so you won't see a price increase from that strategy. So first, in the financial statement, we can see from 1 year ago a huge increase from the revenue, earnings, and production. Now, from a year ago, the operation earnings went up from negative 1.3 billion to now 700 million, and most of it came from price margin and other revenue. The price margin is from increase in crude oil price, which we'll see later, and an increase of demand because of COVID-19 fading away, and lower costs from Suncor. Last quarter, we saw a lot of inventory variations, which we do not see this time, because the valuation is neutral. There's no more depreciation to regain. So last operating earnings from Q1 was 746 million, but if we take out the inventory valuation, that means it was only 205 million, which is a big jump considering that this year we have 700 and it was supposed to be 200 last quarter. Now from a quarter ago, Q1, we see an increase in revenue about 12% and 13% from shareholders. Because of the share buybacks, it's a bit higher. But the earnings did not increase this quarter. It decreased by 12% and the production decreased by 13%. So that seems like a bad sign. But if we go back 1 year ago, Q1 and Q2, it was always a down period for production. So it's not that bad. Now this quarter, there was no gain from inventory because there was no more depreciation to gain back. There was cutting of operation at Fort Hills, which will lower demand and sales. So the price went down a lot. And the dividend that was down for about 55% did not increase. So shareholders did not like those news from the company, which explain why the price of the share went down so much. The price of crude oil was $59 in Q1 and was now at $67 in between Q1 and Q2. So that's an increase of 13.8%. Now for this industry, the price of the companies goes up if the price of crude oil goes up, because if the price of crude oil increases, the margins goes up because we sell at a higher price while the cost remained about the same. So revenue and margins go up if the crude oil price goes up. So if you bought when the crude oil price was down, you're now really happy that the price is going up. Next quarter, the average price will go to $70, up from $67, which is a 3.4 increase, which means we'll see an increase in margins and revenue. Also, A higher crude oil price means bigger inventories and bigger accounts receivable because the crude oil was sold at a higher price and the price in the inventories now have crude oil evaluated at a higher price. So it's better for the ratios, but it's also increasing the industry's ratios. Now that we've seen why the price went up from the crude oil, we need to know from the financial performance why the analyst rated down the company from outperformer to only neutral buy. From Q1 to Q2, we see an increase in revenue, which was already expected by the previous year. The expenses increased by 6%, the earnings decreased by 3%, and the margin went down. The cash flow was down by 12%. Sales volumes were down as well from 11%. And the only saving grace was that the price of the barrel was a lot higher by 16%. You can only rate Suncor down in your evaluation. Now, for the third quarter, we saw that the average price of the crude oil was going up by about 3%. So let's say that instead of 73% price increase, we get 5%. Now we get a sharp price increase from the barrel, so increase in revenue. And we wish to see expenses go down, and we expect from the third quarter to see sales volumes down again. If you want to speculate, you can even wish to see the sales volume up. Next quarter, if you want to buy the shares before the earning date, you'll be happy to see the crude oil price go up for the revenue and assets to go up, and you'll wish for an increase in demand, even though Suncor closed a production train from Fort Hills, which means less sales. You also wish that Suncor raises its dividend to the shareholders so that new investors come in from the dividend increase. Suncor's price is really low at the moment compared to the other company of the same industry. So there's a high potential to gain value more than other companies from the same industry. So I have good expectations for Suncor next earnings season. So thanks for watching. We hope to see the price go up. Please leave a like and subscribe.